Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Let's get into what happened in markets today. We saw losses pretty much across the board today, at least in the grains and oilseed sector. Canola was down $8.20 to 610.40. Minneapolis wheat was down 3.5 cents to 567.5. Kansas wheat was down a nickel at 508. Chicago wheat was down 11 and three quarters today at 522 and a quarter. Beans were down 14.5 cents today at 1024.25. Corn was off 2.25 cents today at 424. Bean oil saw almost a cent in losses today at 50.6 cents per pound. The Canadian dollar slipped about 21 points today, is trading at 72.35 at the time of this recording. Live cattle is up 358 to 234.18, and feeder cattle is up 358 as well to 359.70. All right, let's get into what I think was the market leader today. Here's the soybean chart today. As you can see, we've seen a couple of days here of really heavy losses. There is some minor support from back here, these lows here. Um, that's at about 998 and a quarter. I call that very minor support because I think the more major support is probably this early August low here. So we got to watch out for that. I think that low is around 969 and a half. This is just looking, kind of from the technical chart here. We've broken all the major moving averages now and that previous low today, which that market on Friday had come down to test. Now, this is a slide that I recycled from Friday's video. I think this was probably, or at least it's being heralded as the major driver here, which is the fact that there wasn't a whole lot of progress made on the soybean discussion in the talks between Trump and Xi last week. Um, and they kicked the can down the road into November to possibly talk about it. Or sorry, they kicked the can down the road into January to possibly talk about soybeans. I think there's some other meetings that are happening, and there may be some meetings that will. There may be some talks about trade that will happen inside of some of those other meetings, because they are meeting at the end of October in regards to the Asia Pacific Economic Cooperation Forum. So that's not necessarily directly a trade related or a trade war related meeting, but there likely will be some talks on the sidelines of that. And then other than that, they kick the can down the road into January. So I think that is putting enormous pressure on the soybean market. The other kind of headlines that we're hitting today is that Brazil soybean processors are expecting to invest about 6 billion real. That's about a billion US dollars, or a little over a billion US dollars over the next year as these companies respond to growing demand for not only soybeans, but biodiesel, you know, and oil, oil seeds in general, soybean oil and the meal. Um, this was reported by the oilseed lobby, Abiove, I believe is how they're pronounced, which would increase Brazil's processing capacity by about 8%, or roughly about 6 million tons per year. Which that's a sector that's dominated by like the big five, right? Bunge, ADM, um, Cargill, etc. Brazil is the world's largest soybean producer. Argentina right now is the largest processor, along with the United States. So Brazil's the third largest processor, behind China and the U.S. So Brazil's becoming more and more important, and the Chinese are getting less and less dependent on U.S. beans. Now, I just want to caveat this because I'm pulling a headline here from the China Global South Project. I have never read anything by this organization before. I did do a little bit of research on them just to see how credible they were and if they were, essentially a Chinese government uh, I, uh, news. I don't want to use the word propaganda, but Chinese slanted publication, but it doesn't look like it is. It looks like it's an independent nonprofit, media organization that does provide news and analysis and research, particularly on China's engagement with countries in the developing world, et cetera. So not necessarily just U.S. Or and China related either. It is a U.S. registered independent and nonprofit organization, and it apparently doesn't have any government affiliation. So, having said that, they printed an article today that talked about the soybean imports from Brazil rose by 2.4% in August. This is some news that we already knew. Um, but it does kind of highlight that this is not just something that's hitting headlines just in the US, et cetera. There is a lot of beans being sold from Brazil into China, and China themselves are also trying to reduce their dependence on soybean meal in their animal feed rations. Now, this article, and I just want to preface this one as well, same source, the China Global South Project. This article was published back in 2023. And the reason I wanted to point this out is because it already showed that China has been shifting away from US beans even back a couple of years ago. Um, as well. Likely, this was because of the new threat that was open during Trump's first term as president, or trade war 1.0, as we sometimes like to call it. So China is now the largest buyer of Brazil soybeans, and they moved away from U.S. exports, and this just kind of shows that this isn't just an acute trade war 2.0 problem. This has been something that has been in the works for quite some time. Now, just to remind everybody, we still haven't seen any soybean purchases from China of U.S. soybeans at this time. So I think there's an enormous amount of pressure on the soybean, on the vegetable oil and soy complex at this time. Here's what that did to canola today. Now, I know canola likely has some harvest pressure issues as well. And I updated the thing here. There's obviously harvest pressure coming in. I don't think today's weakness is necessarily linked directly to harvest pressure. I think it came under pressure from the rest of the oilseed complex as well. So 610 was the low. So that's, looking at this cluster here, that low right where that apex kind of comes in here, that was at 610. 20. So today we did break that low. We got to a new low and got down to 608. Now there might be some support here because it did close at the same level or just above. I think a dime above that support level. So I'm not saying that there's 100% chance, but I'm saying that the chance isn't 0% that we will bounce off this support here. If failing that, we probably will see some psychological support down near the $600 area, just because that's a nice round number. But failing that, we have been seeing this canola market trade down into this channel, and so by the time we get down into here, that's getting into the 590, 585 area. So there is some significant concern here on the motion or the momentum that this canola market has been seeing, because right now it doesn't look like there is a pivot happening in this market. I mean, we still are in that seasonal period where we do tend to see prices move lower. So at some point, we do think that this will pivot, but right now, it doesn't look like this is the time. Here's December soybean oil. Now, it did a similar thing today where it did post new lows. And, we continue to be concerned about this lower high situation that's come in. That's three that's come in now, lower highs. We've seen now two lower lows. And now when this low finishes out, that will also be a lower low. So there's kind of a channel formation pattern happening there as well. Next support in this market is at this 200-day moving average at about 448.22. The good news is, though, is that 20-day moving average is rising still. Not very quickly at this point, but it's still gradually rising. So every day that goes by that we don't hit that support, that 20-day moving average goes up. So it will be a little bit higher than 48.22 tomorrow. So if you want to take a positive out of the soybean oil market, that's what that is. Wheat markets had a very tough day today. The Chicago wheat saw the largest gains or largest losses from a percentage standpoint, trading down about 2.3%. There is some support down here. That's call it, or there's, if you kind of put this one and this one together, that's about 504 down here, 508 down here. It's at 510 here now. So there should be support somewhere in between the 2, 3 to 6 cents lower here. But if you look at the hard red winter wheat market, the market obviously continues to push this lower. It did close above. There's two support levels here as well. One from back in May, and then one from this early August here. Um, it did look like it closed above those support levels, but it did trade below into the five handle or below the five handle as well. So a little bit concerning there. Spring wheat again is, it is moving lower than the last low and continuing to move towards this weekly support. So I'll pull back the chart here just to show that. That is at 563, and that is based on a weekly nearby chart. So this changes the contract month as it moves forward. So there's a good indication of where we might find support on the spring wheat market at this point. All right, I want to end this video on a positive note. We may get another kick at the can to hedge some good prices in the cattle market after a decline that brought the market below the 20-day moving average and then consolidating under there. Today, we saw it pop back above that resistance level, which was once a support level, in a good move today. A little less than 2% move, as we kind of talked about that at the beginning, at the opening there. This is the live cattle market, and the feeder cattle even look closer to getting back to those old highs. That previous high there is 363. So, good positive movement in the cattle market. We thought maybe that this run was dead, but they're still showing some signs of life in the cattle market. All right, if you're not subscribed to this channel, make sure you do so, hit subscribe, and you'll get more of our videos, and hopefully you're finding value in these. So that's all we have for you today. Thank you for joining us, and we will see you again tomorrow.